Hello traders, Gary Wagner here just after 12:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday as we say on the islands. It is the 18th day of June 2020 and this is the daily report for gold and silver, our weekend review, and what was a very flat and uneventful week through the beginning of the week certainly changed today with gold closing up in double digits. It seems that there is renewed concern about a second wave of COVID virus and the speed in which we get an economic recovery. Of course, statements by members of the Federal Reserve, including Chairman Powell and President Bullard, certainly tempered any more upside activity in equities, and I believe certainly influenced gold moving higher. We'll talk about that when we pull up our technical studies, and more importantly, what effect today's move has in terms of a technical basis. But first, to the price board. Maybe the third time is the charm. Chairman Powell spoke on 2 days to the Banking Senate Committee on Tuesday and Wednesday, and then a third time today by video conferencing. It seems that coupled with statements made by St. Louis Bank President James Bullard really took the precious metals higher, specifically gold up 1.37%, a net gain of $23.70, and most importantly, above 1750, which was a key and critical resistance level we needed to take out on a closing basis. We're currently at 1754.60. Spot or Forex gold showing gains today of about $21, 1742 and change. That is our current print. Next to platinum, that gained about $15, 827.10. Palladium, really in the unchanged column, 1908.60. Silver had a very respectable gain, up over 1.5 percentage points, 1778, and that's a 27-cent rise. That was all with some headwinds from a stronger U.S. dollar, up 0.24%, 97.63. And lastly, we'll take a look at Bitcoin, which has backed off a little bit, currently down about $100, still trading well above 9,000 at 93.10, and that's a net decline today of approximately 1%. Let's take a look at our technical studies and talk about today's move in relationship to what we can expect next week. Traders, the question we need to ask ourselves, did today's upside move break above existing resistance and indicate that we would see a breakout to the upside? My short answer to that is it is too early to tell. We know that there is a key and critical area at approximately 1750. Of course, that is this area right in here that I've just created a line and a set of arrows. And what you can see when you look at that arrow is we have numerous occasions in which it traded above that particular price point. Here's an actual occasion where it closed twice above that price point. Here also, you have a series of highs, but you don't have effective follow-through above that. Of course, this is the record high at 1788. But to me, what is most important is when we create a upside trend line for resistance and base it upon this top here that comes in at approximately 1770 and change, and this record high here at 88, and then we simply follow that down, what you will see is that today's high matched pretty much precisely with the top of this line. In other words, for us to be bullish in this market, what we would need to see next week, green candle, it should have a higher high and a higher low than today's candle, and most importantly, effectively close above the top of the range. If what we see at the beginning of the week is the market make a play for this area, but then we get a red candle, meaning it begins to turn down, that tells us that we are still within this sideways trading range. So what we want to do is watch very carefully as to how the market opens up on Sunday in the mainland as well as Hawaii. And you can absolutely see the sideways trading range that we have witnessed in gold over the last 2 months when we look at a weekly chart. Although this week we closed near the upper end of the range, This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday or Sunday if needed with the Trade Alert. Have a great weekend. Bye-bye.